Happy March 22nd. JLD here, and welcome to MSTR today. This show is going to be a little different. I'm actually traveling this weekend, so I have something in store for you that I prepared ahead of time. There is a video that I shared about a month or two ago on this show that was called What's the Problem by Joe Bryan. It's a fantastic video. If you haven't seen it yet, I will link it up below this video in the show notes page, but it is awesome. And then what happened was Strategy, the company, had Joe Bryan come and give a presentation to the Strategy team, to the Strategy employees, the company in general. And then they posted it publicly. And it's one of my favorite videos about just the thesis of Bitcoin, the thesis of strategy, and what Michael Saylor is doing and the whole Strategy team. I love this. I'm going to play the first half of it for you today because it's long. It's 35 minutes. So I'm going to play half of it today. I'm going to play the second half of it for you tomorrow. Of course, I'll put the link to both the What's the Problem video as well as this full video in the show notes below. So if you want to just, binge it, feel free for sure. But I didn't want to leave you with no content over this weekend while I'm traveling. So here it is. I really hope you do watch this because to me, this is something that I go back to multiple times. Whenever, you have just that little inkling of like, what exactly, are we doing here with MSTR? I mean, I get it 100% and I love it 100%, but just having videos like this just in my queue to reinforce exactly why I love this company and this thesis and Bitcoin in general. It's so helpful. So it's not financial advice. Please do comment below. I'd love to know what you think of this video, where you're watching from. If you like these kind of things, let me know because then, I can make sure to do some of these in the future as well, especially again, when I'm traveling and I can't produce a video that's like that up to date, that moment in time of what's happening with all things MSTR. So enjoy, and Joe, take it away.
Good afternoon, Strategy. We are very fortunate today to have with us Joe Bryan. I'm going to let Joe introduce himself, but Joe has become quite famous in the Bitcoin world lately with a video that he made for his friends about the big red button and why it's a problem. Just to raise the hands in the room, how many people watched Joe's video before this? All right, half the room. We'll go with that. Joe's going to talk for about a half an hour about one segment of his video in particular after introducing himself, and then we'll have about 15 minutes at the end if people have questions. With that, I will go ahead and introduce Joe. I'm going to turn my video off and take it away, Joe.
Okay, all right. I'm going to share the screen then. Hopefully, Ed, if you just confirm that you can see that, okay?
Confirmed.
Okay. All right, great. Well, firstly, thank you ever so much for inviting me to talk with you all today. This is not what I expected to be doing a month ago when I released this video, and thank you for taking the time to sit and listen. And as Ed said, I'll run you through it. It'll probably be about 25 minutes, and then there'll be some time at the end for any questions that you may have about this or just anything else in general as far as Bitcoin is concerned. So let's go. Okay. Well, it sounds by now that some of you already know who I am, which is still quite surreal. But my name is Joe Bryan, and you can see me on X at SatmoJoe. My background, I did physics at Oxford before joining Goldman Sachs, and then I spent 10 years as an equity derivatives trader, mainly at Goldman, but also a couple of other banks as well, before moving into away from the city and into sports, where I set up a quant engineering business with a colleague, where we would model sports, write algorithms, and create real-time trading systems. We're ultimately acquired by a bookmaker after a few years, and we spent the last 5 years up until 2024 scaling that business from a national champion to a global player. Now, the reason I'm no longer doing that is because in 2020 I found Bitcoin, and I come across Bitcoin a couple of times before, but I think like many people had dismissed it as a Ponzi scheme or not worthy of attention or flawed in some way. And it's because I didn't put the work in or even a small amount of work really to get over that first hurdle. And my God, I wish I'd done it sooner, but I did it in 2020, and now there is nothing more important for me to be working on than spending all my time, all my working time, trying to help people understand Bitcoin and helping Bitcoin win as quickly as possible. And that's the context of which I'm here today. Now, I'm very grateful for half of you having already watched this, and hopefully after this, the other half might be motivated to also watch it. But the boss posted this about a month ago now, a few days after I launched the video to very few people on my X account, and then a few days later found that Michael Saylor had posted it to 4 million people, which has sort of turned my world upside down a little bit for the last month, and given me opportunities like this to talk to people. Now the video itself is I'll talk about the video itself in a second, but my aim here today is simply to encourage you to each take your next steps with Bitcoin. And everyone's at different stages here and has different interests and personality types and other things. And Bitcoin is like a multi-headed hydra. There is something for everybody to get started, no matter where you are in your current position. And so that's my aim today. Now, what I hope to cover is a brief dip into the past, linking that to one of the core sections of the video, which I think then helps link the real issue back to our daily lives, and then combining the two and linking that to what you guys are doing today at Strategy, and really helping share with you how I think about your company. And you may agree or disagree, but maybe it'll give you a slightly different frame of reference and a broader mental model for thinking about the world. And so this guy, I imagine very few, if any of you, recognize him, because this is a picture from 1923, but this guy is Hugo Steins. And he was at one point the wealthiest person in Germany. His wealth was the same as Musk plus Bezos plus Buffett times 10. And he amassed that wealth over the period of about 3 or 4 years before his untimely death in 1924. Now, we'll get into how he did that and why it's relevant for you guys in a second. But someone you may recognize is this guy. This guy's Fiatello. And for the half the people in the room who haven't seen the video, Fiatello is in charge of one half of an island where both halves have perfect money, but Fiatello has perfect money and a big red button. And this big red button allows him to change any aspect of perfect money whenever he needs to. And he changes it in two fundamental ways, but only one of them is really relevant for this conversation today. And that is, whenever he presses the big red button, he can print some extra money costlessly for the government. And so I'll take you through probably the most in-depth slide that appears in the video, because it will help everybody, hopefully, with that skeletal mental model to understand why money printing, which is only possible by the government central bank via pressing the big red button, infects absolutely everything in our lives. And so all the problems that we see around ourselves today share, at least in part, but primarily solely driven in most cases by the big red button and the money printing. So I'll run you through this slide, and then I'll bring you back to how that is relevant for Hugo Steins and Strategy. So when Fiatello presses the big red button, he's printing money, which is just simply debasing the currency. He's printing for free what other people have to work for. And so overnight, he's creating more Fiatellos, which is the name of his currency, in the system, but not increasing the amount of goods and services available to everybody in the economy overnight. And so this has three major impacts. The first one is a distortion of the price signals. The second is that business input costs increase for everybody. And the third is it leads to asset inflation. So that first one, prior to Fiatello pressing the big red button, the only reason prices would change in this free market with perfect money is if there was a change in demand and supply. But the extra money he's created has gone into the pocket of the government. So for that to reach the economy, it requires the government to spend it directly or indirectly with people and companies connected to the government, which ends up changing the prices in those areas of the economy and look like extra demand. When it's not extra demand, it's just money printing. So it distorts the price signals. Now that's a signal to everyone else in the economy that there's a demand-supply imbalance, and the active entrepreneurs and the active capital in the market get pulled in closer to the government, seeing this as an opportunity rather than just a distortion, and pulling their attention away from more productive areas of the economy. And it leads to a misallocation of capital, both real, monetary, and human. The second is that business input costs increase. So every business on Fiatello's side of the island has a human being and or some energy input costs or raw material input costs in their business. And so every company is now faced with a choice. In order to protect the small amount of profit they require to incentivize their continued activities as a business, they've then got to make some changes to how they reestablish that profit margin. So if your input costs go up, you either pass on the price increase to your customers, so you keep the product the same size, same quality, you just increase the price. Or you keep the price the same, quality the same, and you shrink the product. So now the customer gets 90 grams and not 100 grams. Or you find some way to reduce those input costs again and keep the size the same and the price the same for the customer. Now, this is where consumer inflation comes from. It is the only source of consumer inflation. It is the money printer. It is nothing else. Despite what the media says, it is nothing else. Now, if you pass on the price increase to the customer or you shrink the product, both of these things reduce affordability for the population. They either pay more for the same thing or they receive less for the same amount. Now, instead, if a business wants to try and reduce its input costs, it does that most simply just by firing people. And if it does that, again, it reduces the affordability for the population, but it also does something else. It puts additional pressure on the government, because now the government has to figure out how to deal with supporting these newly unemployed people. But if a business wants to reduce input costs without firing people, they do it the more insidious way, which is to reduce their input quality. And so what Fiatello starts to see on his island is that he sees a rise in obesity as fresh, healthy ingredients in the food start being replaced with lower quality ingredients at lower cost, increased levels of industrial sludge. And this creates an obesity crisis. It leads to other health crises as well, which again put more pressure on the government to now step in and deal with. But the third one is asset inflation. Now, since he started pressing the big red button, the stock market's been flying, the house prices are going up, all the assets are going up in price when measured in Fiatello's. Now, Fiatello thinks he's like solved economics here. So I can press the big red button, print this extra money, and then everyone's better off. But what's happening here is the people who own the assets see the value go up in Fiatello's, but the people who don't own the assets are even further behind. They're becoming poorer relative to the total share of the pie at a time when they are suffering from reduced affordability through the cost of living. And you also see an increased level of homelessness because now houses are more expensive, renting is more expensive, fewer people can afford it, and it puts more pressure on the government to solve that as well. But because asset prices are going up, it becomes the prevailing wisdom within society that you've just got to be invested. You wouldn't keep the Fiatellos in your pocket anymore because you're giving up yield. Like, you should be buying the stock market. You should be buying a second home. You should be buying speculative assets because they never go down. You're a fool if you don't. And so you start to see more and more leverage entering the economy, whether it's the individual, it's the company, it's the state, pushed by the banking sector. And when you have higher asset prices and greater leverage and reduced affordability, it means that people, families that used to be able to buy a house with one salary can't anymore. You now require two working parents to be able to afford a home and afford to live. And when you have both parents working, they're spending less time together, less time with their children. You start to see the breakdown of the nuclear family. And beyond that, you start to see a decline in the birth rates because people can't afford to have more children, because it means they have to then give up work, or they go to work and then they've got to pay for childcare, which becomes more expensive. And so Fiatello starts to see a decline in birth rates, which puts more pressure on his demographics. The population starts to age. There are fewer young people coming through to support, and he realizes the promises he made to the older segments in society about when they might be able to retire, or the quality of life that they would have in their retirement and their purchasing power, he can't deliver upon. So he has to find ways to undermine the quality of those things that he has already promised. But for people who are not in a position to buy, or are not old enough to feel like they are ready to buy a house, when assets go up too much, you're left in a position potentially where you feel like you can never buy a house. You're stuck renting. And if you're stuck renting, but the cost of rent goes up too much every few years, you can't plan and feel like you can put down roots. And so if people start bringing a shorter time horizon to their decision making, they start to live more for today and not for tomorrow. They put off getting married, they put off having children, leads to declining birth rates. And a segment of society as well is even worse off, that they struggle to feed themselves and home themselves. It's not about planning for the future, it's about surviving on a day-to-day basis. And they're on a treadmill of decline. And this treadmill of decline leads to hopelessness and the health crisis driven by addiction, and all of this leads to a mental health crisis. And Fiatello realizes that by pressing the big red button, he's just created a huge range of secondary issues that he now has to deal with. And he has to deal with it by the government getting involved, by allocating more capital back into the market to try and deal with these issues, which is a greater misallocation of capital. And then between the misallocation of capital and the more leverage in the economy, it sows the seeds of the next emergency. And Fiatello only has one choice when this happens, and that choice is simply to press the big red button again. There is no way out other than just to print more money to try and paper over the cracks. And so he ends up in a situation where this just goes round and round and round with no hope of resolution. It's just about keeping the show on the road. But the inevitability is just more and more money gets printed. So there's more and more debasement, and each of these factors just gets more and more accentuated. But the one area of this chart which is of particular interest to strategy is asset inflation. And it's what we're going to talk about next.
And there you have it, another episode of MSTR today. I hope you enjoyed this video by Joe. I simply loved it. This was part one of part two. Part two will come first thing tomorrow morning. Of course, if you don't want to wait that long, right in the show notes page of this YouTube video will be the links to both the What's the Problem video, as well as this one, the presentation to strategy from Joe. So hope you enjoyed this. Remember, it's not financial advice, but I would love your comments below. What are you thinking? Where are you watching from? Hope you're just having a wonderful time, because remember, you're the average of the 5 people you spend the most time with. And I'm honored to be one of those 5. And I hope that you are doing a lot of analysis on who those others are as well. And I know I'm only one of your 5, during these videos every day, but hopefully I'm adding a little positivity, optimism, excitement, and enjoyment into your life. And as Michael Saylor is known to say, there is no second best.
What's the second best? There is no second best.